What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about 3 ways to know how to tell when there's going to be big moves in the market. Okay, so I make a lot of videos on TikTok, and I predict the next day's price action, and it's spot on all the time. People are like, "Yo, how do you know where it's going? How do you know? How do you know it was going to do that? Like it worked. Yeah, because I got to keep it simple. I keep it simple. None of that ICT, SMC, liquidity sweep bullshit. Okay. Let's get right into price action. What is the chart telling me? Let's get right into it. So I'm going to pull up a screen of Amazon. So I made this prediction on TikTok the other day. Share my screen here. All right, so I made this prediction on TikTok and said exactly what was going to happen, and it happened pretty much to the G. All right. So the number one way that you know what's going to happen is you need a momentum indicator. What's a momentum indicator? Something like the MACD, the stochastic RSI, your regular RSI, volume RSI. Those are like momentum indicators. They tell you if you're going to get momentum or movement to the upside, or momentum or movement to the downside. So my momentum indicator I use is the volume RSI. Okay, volume RSI. So literally, if it's curling up, the price is going to go up. There's momentum to the upside. If it's coming down, then there's a lot of downward volume. Okay, so what was happening here on Amazon? I looked at my momentum indicator number 1, and it's kind of it's curling down a little bit. It's coming back into the purple space. Usually, if you're above 70, then that's big upward momentum. If you're below 30, that's a lot of downward momentum. But then I also look on the daily time frame, and I look at the 2-hour time frame. This 2-hour time frame is below 30, so I knew there was a lot of downward volume. Okay, so I use 2-hour time frame and daily time frame for my higher time frame confluence. So to see what's happening on the bigger picture. Okay. The second way, and the best way to know if the market's going to go up or go down, is to use the 9MA and the 20MA. So the 9MA is the pink line, 20MA is the yellow line. Okay. So once you get the 9MA crossing below the 20, that's not good. That's bearish. I mean, it's good for me because I like to trade and buy puts. I like to go short. All right. So when the 9 crosses the 20, you know you're getting what's called a market structure shift. Okay. And if you don't know what I'm saying, if it sounds Chinese, market structure shift. All right. And the market structure shift in this case, if the 9 is going below the 20, the market structure shift is to the downside. Now, if you're getting the 9MA crossing above the 20, so the pink going above the yellow, that's a market structure shift to the upside. So if you don't know how to trade, if you just wait for this pink line to go above the yellow line, just buy, okay? And then if the pink is going below the yellow line and you don't know how to trade, just sell or go short. If you don't know what go short means, get out of your other position. All right, just get out. All right, so right now we found out 2 ways. Real simple, 2 ways to know. Okay, so the last way to know if we're going to go up or go down is if we take out a previous level. What the fuck does that mean? Okay, what does that mean? So let me show you what that means. And it's also called a break of structure. So break of structure. Okay, it's just a breakout. So how do we know if we're going to continue up? So let's take a look at this. So this was the most recent high in this area. All right, in this area, this level right here was the most recent high. Now, as we move along in time, so going from left to right, chronological order, we get above that. If we get above that previous high, then we're probably going to continue up until we make another high, we come back down, and then we break that high. Okay, so that's a break of structure if we get a high above that level. Let me try to show another one that's a little bit better. Kind of want to show a really good example here. So here's another example. This pink dotted line here. We have these highs. And remember, wicks don't count. But the closes and opens of the bars count. So this was our most recent high here. And then we had this big green bar close above these highs. Okay. Wicks don't count when you're looking at moves to the upside. Okay. Wicks don't count. So we're looking to just break outside of these bodies, break and close above these bodies so we can go higher. So we had a break and close above these bodies, the bodies of the range, and we had a big move up. All right, pretty big move up. Now, when I was looking at Amazon here, the market structure the breakout was to the downside. So we had this previous low. This was like the lowest low I could see in this area, and we were breaking below. We broke below that low. So that's basically like people say, oh, we took out that low. We're breaking structure. We're getting a newer low. So that likely means we're breaking down. This is no longer support, because these lows and these highs are supposed to act as support and resistance. So here, this was a resistance, but the fact that we broke above it means that it's no longer resistance. Now we can just fly. And in this case here with this low, it was support. And now since we broke below it, it's no longer support. So now we're going to just fall until we find a new support level. So what I said on TikTok was I said, hey, we broke below this low. We have this 920 crossover to the downside and the volume R size coming down. So that's 3 reasons that this should come down. And I just told you that each of these reasons individually are pretty powerful. But if you have them all together, that's getting crazy. Okay, that's freaking crazy. So those are pretty much 3 signs that you're going to get a big move. Again, number 1, you need a momentum indicator. Is it showing that we're going to go up? And as it's going up, look, the chart's going up. As it's going down, okay, look, the chart's going down. Number 2, market structure shift. Is our 9MA crossing the 20MA to the upside? Is the 9MA crossing the 20MA to the downside? There's also MAs when like the 50MA crosses the 200MA to the upside. It's called a golden cross. Or if the 50MA crosses the 200 to the downside, it's called a death cross. That's something that's good to know in the grand scheme of things. But when your moving averages cross each other, that's pretty significant. And then last is market structure shifts. And all that is breakouts. So a previous resistance level like this. So this is a resistance level here. Previous resistance getting broken. So if we close above that previous resistance level, then we're probably going to fly to find a new area to be resistance. And then if this is our support here, a previous low being support, if we break below that, we're going to keep falling down to find a new support. All right, so I wanted to keep this video pretty short today. I wanted to keep it pretty short so that we can just talk about 3 main things of, hey, how do I find out what's going to happen next? What's going to happen next? Look for these 3 things. Look for a market structure shift. Look for momentum on your momentum indicator. And then look at moving averages. If they cross, something crazy is going to happen. All right, that's it. Keep it simple. If you like this video, you want more videos like this, like, share, subscribe, all that YouTube-y stuff, and I'll see you guys in the next video. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.